4 days away, and there has not been much update from Janet Yellen to the Treasury since those former Goldman Sachs executives and former Treasury officials sent that letter saying that it would be a catastrophe, even to have it be a conceivable possibility that this wouldn't get resolved. My friends, Chris Marcus here with you on a Sunday morning, September 26, 2021. And just a quick update as we are rapidly approaching the debt ceiling standoff with the fiscal year for the U.S. corporation beginning on October 1st. So 4 days away, and there has not been much update from Janet Yellen to the Treasury since those former Goldman Sachs executives and former Treasury officials sent that letter saying that it would be a catastrophe, even to have it be a conceivable possibility that this wouldn't get resolved. Fortunately, it looks like the Fed was meeting over the weekend or behind closed doors, as they often do before they front run things. And then Jerome Powell leads the investigation of the Goldman Sachs executives and Fed governors who are one and the same. Although, of course, Wall Street Journal gets wind of this, or maybe they were just studying monetary policy, but meeting transcripts shed light on central banks' contingency planning for worst case scenarios. Now, again, obviously Congress has options. They've always had options. They could have not gone on vacation last month and actually resolved this or cut spending, which I think actually happened when they ran out of money on September 15th. And is why you'll see a lot of the demagoguing at a new epic level over coming days and weeks. But keep this quick. Let's dig in here, because a crisis management playbook Federal Reserve officials created years ago, so they've had this for years, could guide their response this fall if the federal government can't pay all its bills because of a political standoff over raising the federal debt limit. Wouldn't be because they can't stop spending. But the options include the Fed buying Treasury securities in default on the open market, which they've already been doing, and selling Treasuries owned by the Fed to counteract potentially severe strains in financial markets, such as the silver market, where the Fed's own Goldman Sachs sent Jeff Curry out to lie, and then later had his LBMA-sponsored research confirm that the silver squeeze indeed did work. They're running out of silver. Of course, this was a transcript of an October 2013 conference call. I'll look forward to checking in on your behalf later, but go ahead and look it up yourself. Among the officials who said these steps shouldn't be ruled out were, of course, Jerome Powell, the central bank's current chairman, who was then a Fed governor and probably had ties to Goldman Sachs, since that's the way to front run things, I hear. And Janet Yellen, the current Treasury Secretary, who was then Fed Vice Chairwoman. I mean, you really couldn't make these conflicts of interest up unless you heard Janet Yellen gets paid $7 million or so for some speeches at Goldman Sachs. But Mr. Powell called this entire setup loathsome, and others called it repugnant or beyond the pale for two main reasons. First, they would pierce the Fed's institutional preference to avoid directly financing the government, because why not have Goldman Sachs get some basis points by going between Janet Yellen, who's at the Treasury now, but formerly was at the Federal Reserve, where that 2013 conference call could have set up this entire scheme. But, you know, often referred to as the independence from fiscal policy, which clearly does not exist. Yet Fed officials worried if such contingency planning became public, like it is in this article here, elected officials might feel less urgency to raise the debt ceiling limit, which translation, I don't know for sure, but I would interpret that as extremely high chance that these guys do nothing or say that they do nothing. The Fed comes in, saves the day with more money printing as they lose control. There's a reason investors are fleeing the bond market. Maybe it has something to do with the only debt reduction means I've seen is that CNN, in what Wall Street parlance is called, floated a trial balloon about bringing the $1 trillion coin back. Although if you actually want a coin with real value, not that government junk, I'd like to thank Reina Silver, run by Jorge Ramiro Monroy, that is actually digging for silver very close to where I am currently in Mexico. And we'll be taking a trip for a few folks up there at Silverfest this October, where Jorge will be. So thank you, Reina Silver, and thank you for everyone that is not falling for this well in advance setup standoff, but at least thank you to Wall Street Journal as well for giving us the Fed's playbook. I can't even begin to imagine what is in that conference call, let alone the rest of this article, although who knows, maybe we might find out in a couple of days. But in either case, stay tuned. More coverage coming today as we review Reuters' analysis of whether these silver apes will ever be able to beat the silver market. Interesting article coming your way, so hit the subscribe button and the notification bell, and you will see it as soon as it is released.